On to Investing 101. When the going gets tough, it's older Americans who are better at keeping on, keeping on. Edward Jones has the proof in a landmark study. Scott Thoma, the principal of client needs research at Edward Jones, is here with the details. Scott, what can you tell us?
Yeah, absolutely. We found that the older generation, and it was a little bit of a surprise because we expected, given how devastating the disease has been for older Americans, that they actually would not be coping very well. And that was exactly the opposite. Older individuals we've seen have been very resilient through the downturn. Their focus has really not been on the disease much at all. They're much more concerned about things like their mental health. They've been through a lot over their lifespan. They've seen a lot of different things and they've been able to adapt to that. And so while about a third of the younger generation has actually been seeing some mental health issues during the downturn, less than 10% of retirees have actually been impacted by this downturn from a financial and mental perspective.
You have come up with the 4 pillars of the new retirement. Explain what that means.
Yeah, there were 4 things that really rose to the surface from our study as to what are the things that people need to focus on to live a more successful retirement. And those 4 pillars were finances, family, purpose, and health. And having a strategy for each of these 4 areas were found to really increase the success of people's retirement. What we also learned, though, is that they're expecting much more from their financial advisor. They want their financial advisor to focus on these 4 pillars as well. A financial advisor who can be a guide with them and can help them in each of these different areas in order to live the retirement that they desire.
How do you see traditional aspects of retirement changing in the future?
Well, we see retirement changing from not just this end of life. It's not a period where people are now stopping work. They could have 25 or 30 years in retirement. And people are viewing this as this new beginning, this new opportunity, this new period to really define themselves. And so defining themselves around their purpose. How do they think about giving back? How do they want to be engaged with their family? How do they ensure that their health span matches their lifespan? And then tying that all up with their finances, that their finances are able to provide for those 3 other areas. So that's where those 4 pillars come from. Absolutely. So for more information, we have the full study out at our website, www.edwardjones.com/new retirement. And if they want more information from there, of course, we'd recommend they go see a financial advisor.
Thanks so much for joining us for Investing 101, Scott.
Thank you, Angela.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.